Basically in this video I'm just going to teach you one strategy, basically the only strategy you will ever have to use in your trading journey from the day you start until the day you decide to stop trading, or if you quit, which you shouldn't quit, because trading is just a self-improvement journey, man, at the end of the day. But yeah, so we'll get into the strategy. Number one is daily. See, it can be, I use a daily, but I'm more into the 4 hour time frame and the hourly. Daily / 4 hour. So obviously, as you know, these are time frames. So all we're doing on the daily and the 4 hour is we're basically just trying to create a bias in which we think the market is bearish or bullish. That's all it is. Really simple. Higher time frame sweep. Higher time frame. Liquidity sweep. LIQ. Oh yeah, by the way, just don't mind my what's it called? Hieroglyphics, I think. It's like ancient Egyptian handwriting. Breakup structure. And if you've watched my videos before, you'll know that I've actually told you about this strategy before, but it's not the same. It's different. It's way higher probability and way higher win rate, bro. It's just way better risk to rewards as well. All it is, instead of using the fair value gap for an entry, I'm using supply or demand, and I'll give you an example as well. Supply / demand. Entry. Simple. So we're looking for on the daily chart, the 4 hour chart, daily 4 hour, and the 1 hour. The 4 hour and the 1 hour. Normally the hourly, after you've found out what the daily is, and you've watched the 4 hour chart also, we're looking for the 1 hour sweep. We're waiting for a 1 hour sweep. Once we've got the daily and we've seen an hourly sweep on any pair of your choice, and then after the sweep see a break of structure, then we're waiting for supply or demand to get retested. And I'll give you an example of what this will basically look like. So in a bullish example, say we've got so that's price coming down and sweeping out a low. This low gets swept, we break to the upside, retest supply, and then keep going. That looks weird, but I'll put a bit more on so you really understand. So this is the low, we're bullish. Obviously you should all know what a high time frame liquidity sweep is. Candle comes low, closes high, we get the candle closure up high, we get a break of structure here. Actually no, it's not. Sweep, we get a break of structure of a 1 minute, 3 minute, or 5 minute, but the best is to do 1 minute or 3 minute. Sweep, break of structure. But you see when price breaks, basically it leaves demand behind. Demand is basically where price swept and then pushed to the upside really fast with strong momentum. It leaves a big block, basically a big buying block for banks to turn price back into this block, and then you get the big extension. That's going to be in this zone. That's the one. I'm going to make that a bit bigger so you can see that properly. So as you see, this is really simple. This is a bullish example. Price comes low, we sweep low where you see that level is, we break structure to the upside on the 1 minute, 3 minute, 5 minute, and then all we're doing to get our entry is wait for price to come back into our demand. So my entry will be here. So that's my TP, and then my stop loss is there. My stop loss will always be below this low, because that's the protected low. If you put it anywhere below this, you're risking unnecessary risk, if you get me. That's a strong stop loss as well. High probability that that won't be taken and will be respected because of the break, because of the retest. This gives this strategy so much higher probability. So this is always going to be your entry. I'll give another example. Bearish. Take a photo of this as well. I'm gonna make sure this is still recording. Take a photo of this. Do what you please. I'm gonna upload a video twice a day. So one in the morning and one later on at night. And it's literally just gonna be lessons on here. If you want me to speak more clearly, you need anything explained in better detail, just tell me, man. Just drop it down in the comments. This is exactly what I'm doing this for. I'm doing this for you lot. So here, price comes up, sweeps a level out, break structure to the downside. Where that sweep has been, we create that supply block, don't we? That supply block there, which it gets retested, and we can get our entry. Say that we've got a 1 minute candle here, and we break structure, meaning we close below, and then we retest our supply for our entry. So my entry would be here, my TP would be wherever I'm targeting, and my stop loss would be just by that high, like this. So normally, because using supply demand over a fair value gap entry is way better risk to reward, because instead of waiting, a fair value gap would be like here. We'll have a big displacement, break of structure, and then it will leave past behind a fair value gap. But the reason I changed my strategy is because I started realising that most of the time these fair value gaps aren't actually holding, and I was getting worse risk to rewards with fair value gaps, lower win rate with fair value gaps. It's not it. It's not it. Supply and demand, you might see this strategy play out, let's say, twice or 3 times a week, and this could bag you a 1 to 5, 1 to 6, 1 to 7, basically a 1 to 5 plus easily. Whereas if you were going to use a fair value gap, more than likely it's going to be a 1 to 3 or a 1 to 4 with a bigger stop loss and lower probability. We don't want that. This took me nearly 3 years to really bring this strategy together properly. It might look simple on here, which it is simple, but it's simple and effective. This shit's effective. I can show you this on the chart as well, because we're done with the whiteboard now. I don't need to show you anymore. I'll get you a closer look. Daily 4 hour. After you see that, we need a 1 hour higher time frame sweep. Like I told you there, when price comes up, sweeps out a candle and then closes below. That's a sweep of liquidity. And then we look for our break of structure on a 1 minute candle or a 3 minute candle, and then a retest in supply or demand. So here we have our sweep, we have our break of structure, and then price retests into our supply where we short, and that's our entry there. Simple. Bro, this is gonna make me a fucking millionaire, boys. Hopefully I don't get copyrighted because of my sister. Look at gold right now as well, literally as my strategy is playing out. Demand. Let me show you a computer example. Go on the 5 minute. I'll go on the hourly to see the sweep first. See right here. So we get that sweep of liquidity there. Liquidity sweep. So we've got our hourly liquidity sweep that we were looking for. We get price displacing to the upside. We're going to go on a 5 minute and a lower time frame. This is my demand here. You see when price comes down, sweeps, and then pushes to the upside, leaving a block behind where price can retest. Look, retests it, retests it. You can get your entry here, here, and if I was going to get my entry here, my stop loss would be below this low. So like this, we've swept, we've broke structure, broke structure here, so our entry would actually be here. I beg I don't get copyrighted. See how simple this is? Relative equal highs there to target, hit it 1 to 4 right there. With that entry, price sweeps, breaks structure, comes back into our demand zone, we get a buy. That's already a 1 to 3. And you can easily target this high here. And just let that run for a 1 to 5. Obviously here the stop loss is a bit bigger, but we always want our stop loss below the low, because that's going to give us the highest probability setup, and also the highest probability of our stop loss not being hit, which is exactly what we want. So yeah, this is just a simple one from me, boys. Simple, effective, easy. You can do this, I can do this, we can all do this. Just keep going, don't quit. Make sure to drop a like, drop a sub, man. Much love to you all.